right, everybody. I hope you're doing well, and welcome to an episode of the Skin in the Game podcast. My name is Saxon Baum, and I'm your host today for the pod. I'm super excited to have a friend of mine, a co-investor, here with us today, Marshall Sandman, live from New York City, New York Tech Week. Marshall, how are you, sir?
I'm great. I'm sorry that we're not in person. It would have been
No.
once it cools back down in Florida, I will we can do the follow-up in like October.
Exactly. This is part one. We'll have part
Great.
two in October. And you were
And
just
part
in
two,
Tampa, right?
I was just there. I was meeting with
Yeah.
an investor who's been invested with us for years, who I'd never met in person. And I literally told him, I was like, I'm coming down just to see you. Like, we just got to cross this bridge here. And it was funny because he'd already committed to the business. And my partner Dylan was like, you can just blow it, right? Like he's literally writing the check. So like,
He's already
what are we
in.
doing? But I think it went well enough.
No, and I know you're a big face-to-face person. We were talking about, just earlier, some of the travels that you've got planned here for the summer. But don't you think, I mean, at least for me, and I would love to hear your opinion on this, getting in front of an investor and working with them face-to-face just makes all the difference in building trust and rapport in today's day and age.
There's still no replacement for it. And I actually think that the AI wave is making what I've made a habit even more important. Like, it's actually been a huge benefit because people like my investors who have been with me for 6 years and in every vehicle and every co-invest, like they all know that I show up. Like, I am known for showing up at people's houses. Last week I was at Paris Hilton's house and her husband, and like playing golf in their backyard and having fun. And I literally got a call from Christina Aguilera's husband as I was leaving, being like, I know that you're here. Like, I know that you're just across the hill. Were you not going to say hi? And like, it sounds like silly and like I'm like very braggy, but like that is the reality of this business. Is like, it's the same way that my investors expect me to show up. I create that same expectation with our founders. And so like,
Yeah.
it is just trying to practice what I preach.
Yeah, no, I love that. And it's always, I mean, for us, at least for board meetings, like I try to go to at least 2 out of 4 board meetings in person for a year, whether that's in Miami, Los Angeles, New York, wherever it might be, just because you get a lot done in that boardroom, but sometimes you get even more done at a dinner after or the night out after with those founders, just being in person and really loosening up and truly talking about the business. So yeah, on the founder side, I couldn't agree more. I mean, the in real life conversations, just even an hour in person is more effective, in my opinion, than hours on hours on a Zoom call or on a phone call.
It In a world where people got very comfortable making decisions on Zoom, I think there's a totally different level that exists. And it's been, I don't know, like it's been a big part of what we do. And it's unfortunate that my partner she has 2 little ones at home. And so I joke that she's like the artillery gun. And like that I'm the bullets that are being sprayed out.
Somebody's got to do it. Somebody's got to be the road warrior.
Yeah. And I'm for now, I'm happy for it to be me.
Yeah, no, that's great. Hey, let's take a step back. Would love for you to tell the audience about your story, who you are, where you grew up, background, and then we can get into, what you do today with Animal Capital, the strategy that you guys have, the success that you're having and that you've had, and what you think the future looks like for the VC market and a lot of the work that you're doing.
So I am from Raleigh, North Carolina, and I went to Cornell. And
I didn't know that you were from the Southeast, but there we go.
Yeah.
That's awesome. I thought you were a Northeast guy always.
No. And I worked at Goldman Sachs. I worked at a chop investment bank called Jaggy in Midtown. I think that, on the list of like funny things is like the world is evolving. Like, I continue to think that my experience at a chop shop sell side investment bank, like, it is still the hardest job I think you can take out of college. Like, I don't even think it's close. Was by far like the most important transformative work experience of my life. And like, I could talk about it for 5 hours, like why that's what people that like want to be entrepreneurs should do, is go try and sell another entrepreneur's business. Like,
And is that, when you say chop shop, is that just basically taking on any business? Like, you guys would try to sell anything?
no, we were definitely more selective than that, but it's like, I went from doing deals that were $5 billion to deals that were $50 million.
Yeah.
But the reality is, it's like, it's a chop shop, and then it's a couple things. It's a volume business. So, we were doing between 17 and 25 deals a year. You eat what you kill. You close a 48 million. I'm trying to do the math quick in my head, but like it's called a $50 million business, and you take a 7% transaction fee, whatever that number is. It's a couple $1,000,000. It's gonna be $1.8 million ish. Like the reality of, I'm doing that math so wrong. $5 million
No,
would be
it's
five million
like
dollars would be
four point
10%. So
something million.
three and a
Yeah.
half million dollars would be 7%.
Yeah.
And it's like you'd get a check. Like I didn't get a check for $3.5 million, but I was 25 years old and I got a check for like 100 grand, and I was like, I am the richest person in
I
Canada.
am the richest person in
Right, but
America.
you learn everything that there is to know about entrepreneurship from learning from entrepreneurs that are selling their businesses 5, 8, 15 years down the line into something they built themselves, built with a partner, built with their family, etc. And so it's a special relationship that you build. And I joke, the first person whose business I sold, her name's Nancy Splain, and we're still friendly. And we sold her business to Blackstone, and like we changed, like it sounds dumb, but like she changed my life and I changed her life. And you don't get that at a big investment bank. You don't get that at a consultancy firm. And even now, that name brand, which used to mean that you had like a certain level of like hardworking, like nose to the grindstone, whatever, being at Goldman or being at McKinsey, I don't think it's the same anymore.
Yeah, it's
Um,
interesting.
so anyway, I quit my job. I went to WarnerMedia. I led the private investment platform there for most of my time there. I started off, more junior, and then AT&T bought Time Warner. They let go of 60% of their staff. I kind of rose to my, interesting role, and we got to write interesting checks and interesting businesses and thoughtful founders at, significant scale. But I think it was the mix of those things that led me to starting my own fund. And so I started my own fund in 2020. We announced it in 2021. We've deployed like, I think, like 115, $120 million into about 100 early stage businesses. We've had 4 true, early stage seed or series A to unicorns. 2 of those are decacorns. We're about to have our
What are
first
those companies?
WAP, Whatnot, Underdog Fantasy Sports, and Colossal Biosciences.
Got it. And I want to talk about a few of those companies later because they're super interesting. Specifically, Colossal. I mean, that company, if the audience doesn't know, this company is essentially creating or recreating animals and different sorts of organisms from the past. Is that correct? I mean, they're real bringing things out of extinction.
Um, it's really like the best comp for this business is SpaceX. Like it just is. Like you had a crazy founder in SpaceX who was dead set that reusable rockets were a business. The entire market was like, this guy's really smart, but I don't care about reusable rockets. And we all watched on TV live as the Falcon X came back down and then blew up. And then
Three
he did it
times.
again. He
Yeah.
did it again, and it eventually worked. And then all of a sudden, in that exact moment when we all watched the thing there, I'm like, oh shit, like we can launch satellite, like all these things that were always clear. I think to most people, like the public market sentiment finally evolved into
Yeah.
that.
It became a reality.
And so I think that this is the same. And I think that as Colossal sort of privatizes the business of biodiversity, that this is the planet that we all live on. This is the planet we all have to live on for the foreseeable future. And so whether it is bringing back extinct species, saving endangered species, sequestering more carbon, making sure that, cows that are being, herded within certain, geographic environments and ecosystems are not contracting ringworm or incestuous disease, so that, cattle prices and commodity prices aren't affected so drastically, and inflation, doesn't, hit grocery store shelves as aggressively. These things all eventually make their way to our wallet, which is all that people really care about. And Colossal owns the space. They have hired all of the best synthetic biologists in the world, all the best ancient DNA experts in the world. We own our data set. We own this space, and I think that, like, we announced last week that that we had hatched eggs completely out of artificial, hatched chickens out of completely artificial eggs. And like, I think it's one of the first moments that we're having that SpaceX moment. Like, I think it's
Yeah.
looking at the full argument.
I mean, it's life changing. I mean, this is
We
a once in a century type company.
It was announced 8 days ago from when we're recording this. It's done over 12 billion media impressions in a week.
Insane. But I want to
So
go
like
back to WarnerMedia because you have a really interesting path from this chop shop to Goldman to Warner, and then starting the firm with a very unique thesis. So was WarnerMedia your first introduction into the whole media celebrity world that you built Animal Capital on? Was that really how you got into this? I mean, you mentioned Paris Hilton and Christina Aguilera. Was that the introduction to this?
I didn't know any of the celebrities, not a single one that invested with us. I didn't know any of our investors that invested with us.
At Warner.
No, at Animal. So like the introduction was a mix of things. It was two things. It was one, it really sucked that we invested in businesses that we then didn't do anything to help. And so there's only a handful of ways you're gonna be able to help these entrepreneurs, and celebrity is on that list. And that's what we represent, right? Like we own Bleacher Report, we own The Bachelor, like we own a tremendous amount of distribution. Um, and so we represented sort of the celebrity in that way. I think we're just as good B2B software partners as we are celebrity partners. And then, there's a handful of little things that happened while I was there. We bid to buy The Ringer from Bill Simmons. Um, and the impact that Bill had at the time, especially on The Ringer, was his celebrity was much larger than the platform.
What's the ringer?
The Ringer is probably one of the most successful podcast networks ever. They sold to Spotify for
Got it.
$300 million.
Got it. Got it.
Um, and Bill was a huge freaking podcast. Like Bill continues to be in the top three, um, single sports podcasts of all time every week, millions of downloads. And you just start to see that like people have a disproportionate impact on business outcomes. But the reality was that their ability to sort of like tame their flamethrower, like to use it the right way and point it the right direction, continued to sort of be crappy. That most celebrities, yeah, like Tiger Woods and Tom Brady and the most famous people in the world, they're going to have a great team that puts them in the right rooms and helps them write checks into Anduril and Palantir and whatever. But Nick Braun, who was cousin Greg in Succession, he has a business manager and a private wealth person, but he doesn't have a group of people showing him a thoughtful selection of deals over a period of time to represent a vintage and a diversity of outcomes. And so like that as a service, I mean, I don't know that it exists even now, because private wealth managers inherently have they represent a I don't know what the right word is, like a juxtaposition with like the venture community, right? Because
Yeah.
they're only interested in having their clients keep their money on platform
Yeah, it's always a
separate
challenge.
product.
Yeah, it's always a challenge. I mean, they call it selling away. I call it, giving your clients better investment opportunities.
It's
But
better.
that's just what we
It's better
say on our
extraordinary.
side, right? I mean, yeah, I couldn't agree more. So Warner Media, you guys, you were really seeing what I'm hearing. You were really seeing this sort of individualism in some of the investments that you were doing. And that parlayed into starting Animal Capital, realizing that there's these celebrities out there that need this offering, really. And, you guys came in and created an offering that's very unique for most venture firms, working with a lot of these celebrities and celebrity family offices.
We're a traditional venture firm. I mean, the reality is that, I'd say we have 25 celebrities that have invested with us across everything that we've done. They're some of the most famous people in the world. But the rest of our investors are institutional. They're monster family offices with huge investment committees and long multi-month processes. And it's a committed capital pool. Everyone pays the same fees to participate in the fund. And the reality is the everyone in the ecosystem is designed to benefit. And it's the reason why, as we think about the next vintage of Animal Capital, like we've had a lot of success and we probably could go raise $150 million, but we won't. The best venture funds ever are all under $50 million. You never heard of Andreessen Horowitz $1 billion fund being a 12x fund. It's not going to happen. It's not even a 6x fund. It's not even a 3x fund. And so you want to present, I mean, the same as anybody else. Like I need to present the best service that I can, because that's what I'm selling as a service. And so yes, for the celebrities, it's a little bit different in that there's an opportunity for them to get more involved with these businesses, but it's not that different. We have the founders of Netflix and Twitch and Tinder and Android and the former president of Goldman Sachs, the former president of Disney, all as investors in the fund. They get their fingers, and their feet wet in these businesses just the same way, and they provide a lot of value too. And so we just is all about delivering great returns and servicing our founders.
And your guys' thesis around investing, I mean, what are you guys investing in right now? What are you looking for from a portfolio standpoint?
We've never done crypto or blockchain. We never did the creator economy. We never did .ai. So for us today, I'd say like what we're most excited about is services businesses that are underpinned by a level of efficiency and a gigantic moat. So if you are, I don't know, if you are servicing on the B2B side, Target and Costco, if you're servicing on the B2B side, telecom, like, and those relationships take a really long time to build, but you execute on that first contract, that's the journey that I want to be on, because I think that the people are like wildly overvaluing the AI startup space. I mean, it's just going to be another disaster, and the fact that like the writing is, it's not on the wall, it's like it's painted in blood.
Yeah. And history repeats itself. I mean, we're at in my opinion, the top of a hype cycle, specifically when looking at enterprise AI. I just wrote my quarterly report looking at Q1, and that was really what it was all about. It's very challenging to invest in these companies right now. I mean, the prices are insane. And when I see average founders with average ideas getting premium valuation, that's when I always say it's time to back off. I mean, this market's way too hot in terms of enterprise AI. I know you guys, you've always said, since at least in the last few years when we've been talking about it, .ai is not something I'm interested in. That is not something I'm interested in. Just like you just said, hey, we weren't interested in crypto. So you guys really don't ride these hype cycles. I mean, it doesn't seem like it's a part of your thesis at all.
Never. I like, even when we invested in whatnot, I mean, it's easy to say like, oh, whatever, like hype. Like I did it in a seed extension 6 years ago. And the thesis was live shopping in the US needs to get, rejiggered and requalified for its audience. And like that thesis, nowhere else. And
it's not like it was, hey, we're gonna ride the Pokemon wave, right? We're not gonna ride box breaking and card breaking.
completely. And of course, like they offer that service. And it's the same way that like WAP rides waves too, right? Like they did sneaker bots, they did restaurant bots, they did, now clipping has sort of like come, and now I would say it's on the down trend of like clipping as
Trent, yeah.
but those, for the WAP, those trends have come up and then they go down to about here.
What does WAP do? I'm not familiar with that business.
It's a software marketplace, and so
Okay.
anyone that's built a digital product of any kind, and I don't mean like, I mean, some people are offering classes and stuff or whatever on there, but like, it's more esoteric products than that. So like, if you were like, I make $100,000 a month, buying bulk product on Alibaba and then mass listing it on Facebook Marketplace and eBay, and the ARB on these styrofoam coolers is 80 cents a cooler, and I'm going to sell 6,000 coolers. People are providing that information in real time. And then even farther than that, WAP provides a safe payment layer and authentication for
Very cool.
between the service provider and the customer. And they can even like get them logged into their Alibaba account. They can execute on the orders for them. So like they provide that back end service for over 60,000 products. They did $315 million of GMV.
Really interesting.
Last
month.
A month.
Oh wow, this is a big business.
They are, in terms of GMV, we are up 1 million X from when we invested.
Insane. Where's the company based?
Brooklyn and Williamsburg.
And you guys are based in New York, right? The firm is based in New York.
We are based in North Carolina.
Based in North Carolina.
Yeah, I'm in New York a lot. I have an apartment here, but I'm in North Carolina basically just as much. It's just to help benefit the North Carolina ecosystem. I think that, it's a place where there's a lot of talent and a lot of ideas coming along and not quite as much execution. I just saw like a random fact that like the biggest exit in the history of Phoenix, Arizona was Carvana. And like it was like $800 million exit. And I think about Raleigh in the same way that like there's so much talent at Duke and Wake Forest and NC State and UNC, and you want to keep people in the ecosystem. And so I think if I can just be home where I grew up a little more
Yeah.
and lead, then it's worthwhile. So we're we're
Yeah, I
we're,
mean,
ba-
it's
we're based
it's
on Creedmoor Road in Raleigh.
it's the same philosophy that we have. I mean, we invest all over the country, right? We'll invest in New York, we'll invest in Silicon Valley, but when we see a company in Florida or the Southeast and it's apples to apples, we're going to invest in that company every time. A, because we typically get a discounted valuation. B, honestly, because those founders are typically the types of founders that we like to work with. Not to say that there's anything wrong with major market founders. It's just a bit of a different feel when you're kind of that big fish, small pond. So I completely agree with you. And I didn't realize that you guys were headquartered in North Carolina. So let me build on that a little bit. What are you seeing specifically in the Southeast then that you're excited about in terms of technology?
There's so much industrial AI garbage
Yep.
right now. I mean, it's freaking crazy. Kyle Kuzma posted about it on Twitter yesterday. Like it's everywhere. Um, I think that when you have a manufacturing hub, North Carolina is the furniture capital of the country and potentially the furniture capital of the world at the High Point Market. They do some of the most commercial and residential sales of anywhere. And I think, and we manufacture furniture, we manufacture glass, big exporter of glass. Um, we Tyvek home wrap. I mean, there's lots of things. We are also a huge pharmaceutical hub. GlaxoSmithKline, Pfizer, Merck, all in Research Triangle Park. First Citizens Bank bought Silicon Valley Bank out of their crazy moment. That's based in Raleigh. And so I think that the opportunity to innovate and create B2B clients in the Triangle is second to none. Um, and so I candidly haven't seen it yet. Haven't seen the business to invest in that's like capitalizing appropriately, but like sitting there waiting for it.
Yeah. Yeah, we have a similar philosophy, and we're seeing for the first time in a while, companies are being built in Silicon Valley from a technology perspective, but the clients of those companies are no longer in Silicon Valley. They're in places like Tampa, Florida, or Raleigh, North Carolina, where industrial business is getting done, and those are the buyers. It's more of the white collar buyer is what these companies, I'm sorry, the blue collar buyer is what these companies are looking for. So it's really been advantageous for us in terms of winning deals out of major markets because we know all the buyers and we can make those connections.
It's not dissimilar. I mean, Raleigh is, this is the first year that they weren't the fastest growing metropolis in the country by percentage. They fell to like number 7. It's a little sad. Um, it's a special place, and I know you feel the same way. If you can benefit your hometown, like you're also like a slightly bigger fish in Raleigh than I'm ever going to be in New
Look,
York.
yeah, no, agreed. All right, I want to discuss the media strategy, you personally, and Animal Capital. You do a great job. So I just want to kudos to you. A great job on the media for the firm. You guys are always out there. You've got great content. Currently doing one video every day for the entire year. How have you developed this media strategy? Has it always been integral to the firm? And talk a little bit about the benefits that that media strategy really has for you guys as a firm.
Um, yeah, we did, other than like a fund announcement, and like I did a couple of TV spots at the time around the fund announcement. I didn't talk about anything. Like the whole goal was really like, I got to go prove it first. And we talked about like showing up and how important that is. Like the entire firm was built on the back of me showing up. Like there wasn't something else. There wasn't anything else. Like our data room today is filled with founder references, all for people for whom I showed up on factory floors and in boardrooms. And I mean, places literally around the world at all times of the day and night, to help in tough spots. And fortunately, from being in an ice storm in Dallas before Colossal closed their Series A and helping like reformat a go-to-market strategy that basically no longer exists to get people excited about an investment. And now they've raised $600 million and they're worth 11 billion bucks. And like we're past that. We're out of those woods. So like, showing up at a factory in Spokane, which was, based out of the back of a flower shop, and working with our founders and like, hey, you're relating to your investors in the wrong way. Like, they're doing math differently than you. Like, let's sit down and talk about it here in your factory, like live. Like, that was the strategy. And so now we've had a level of success, right? I mean, we are in the top 1% of performers in our first fund. It's a 2021 vintage fund. We've returned a bunch of money to our LPs. We're continuing to return a bunch of money to our LPs. That like I didn't have the right to talk about what I wanted to talk about online. Like, I hadn't earned it. And even today, like, there's like definitely some imposter syndrome of like sitting and talking about it. Like, I know, but the reality is I have written 100 checks. I have deployed $100 million into over 100 businesses. I have been doing this for close to a decade now. My partner comes from General Atlantic, which is the best growth equity firm in the entire world. Like, we have a right to talk about it now. And so we are really focused on delivering some value back to the community. We're focused on letting founders know, tip of the spear, like what we're all about. I think that it's very qualifying for the. I mean, listen, certain founders are like third-time founders and they don't need to know who the hell I am. But like, if you're a first-time founder and you're looking for money and you haven't raised anything, you're raising at a $7 million valuation, and like you're trying to navigate the market, but you have a great idea and it's something we'd be excited about, I'm literally putting the lessons right in front of you.
Totally.
Like, I'm absolutely, I'm making it idiot proof.
Yeah.
Like,
Yeah.
this is what goes in your deck. This isn't what goes in your deck. This is how to conduct yourself on a first call. Here's the secret sauce for going and getting this done, and then how you carry that from pre-seed to seed and seed to A. And so the excuses kind of go away. And so we've written 2 checks into businesses that came from my Instagram in the last 145 days. And in
That's
both
awesome.
cases, and like, this is me blowing a little bit of smoke up my butt, but like, they'd watch the freaking videos. Like, they were like, one person was there because they knew that they had kind of a communication problem and they wanted to be able to tell their story differently. They'd raise their whole round. I was the last check in to a really thoughtfully structured pre-seed round at sub $10 million valuation. The second check we wrote was at a $3 million valuation, and I was providing access to someone. The business is in Western Kentucky. It's in Western Kentucky. Like, we have an
And
opportunity.
are these companies reaching out to you after seeing your content? So these are
Yeah, and
direct
by the way,
reach outs to you after seeing content.
maybe one day I'll have 100,000 followers and I won't be able to see it all. I see every single message, and
There you go.
I
Founders, send the DM. He sees every message.
I mean, knock on wood, but like, I haven't walked out of my. It's just funny because like in New York, it's really clear where I'm filming. Like, it's just really clear. Like, if you live here, like, it's just completely obvious where my apartment is. I get stopped on the street probably 4 times a week. Hey, like, I love the videos. Hey, whatever, including this morning. I walked into the grocery store yesterday and Leonardo DiCaprio was in the grocery store, and I went over to say hi because he's an investor in Colossal. And I said hi, and he completely ignored me and acted like he literally acted like I didn't speak. Um, and then somebody else said, like, in that same moment, like, hey, like, Marshall, I absolutely love your videos. Like, thanks for like whatever. And he kind of turned around, but then still didn't say anything. But it was a very validating moment that was
Still,
within this
that
grocery
was
store,
yeah, that's so funny.
in my neighborhood where you're still wearing a mask like a crazy person. I am the second most famous person here in the grocery store. But
So a video per day for 365 days.
it's
You're half
exhausting.
it. I was gonna say, you've got to be exhausted. Hey, are you coming up with these topics like weeks before, or is it the day of? How are you planning all of this? And by the way, for the audience, you've got to go and watch these videos specifically for founders because it's informational content for founders, to Marshall's point. And this is not him talking about animal capital, but it's talking about information for founders so that they can get smarter when they go to fundraise from institutional venture capital firms.
Yeah.
Or I guess from angel investors, from anybody.
Yeah.
Fundraising from anybody.
I would say it is there number 1 for founders, and it's number 2 there for investors or like any kind of like professionals that want to dip into venture so they know what their expectation should be. And I mean, because like on the investor side, it's the content's been, it's not sillier, but it's like it's clearer. It's like I've sat on the investor side. I haven't sat as much on the founder side. So it's like, I can say pretty clearly, like, if you're going to write a venture check, don't write one. You got to plan on writing 5 or 6 in a year. Like, you need to like index within your vintage, like it's stuff that's clear. But to answer your question, I have buckets that I really want to fill over the 300 days. So there's like big swath categories that I want to cover. And then as stuff comes up, I like completely pivot for the day. So like Kyle Kuzma did, as I said, Kyle Kuzma did his 2026 venture trends. And so like I roasted him today. And so that is, it's May 27th. That will be May 27th's video.
So do you get these? Do you get them out the day of? So you record it day of, and then you get it out. How
We're
does that
usually a
work?
day before. So I'm usually like, I
You're a
usually am
day
like,
after that you do it,
yeah. So like I already had a video for today, but because it's so topical, I'm going to wait and
and
post
you're
the Kyle
gonna
Kuzma
put that
thing.
one out.
And
Who's the famous person behind the camera? That's the real question. Who's doing all the recording?
my my famous partner is recording most of these. She's a real estate developer. She's in real estate in New York, and she is now a professional golf creator. Um, and is an out of control golfer, and she's an out of control real estate professional as well. She's very successful on both sides of the coin. Yeah, so she was on Owning Manhattan as a real estate broker, and and then she like went on to work at Compass, and we went out, and she is just turns out to be a tremendous golfer. She's been working at it her whole life, and so and talk about a place where there's some synergies of golf and finding real estate clients. But no, she's got the eye for it. She films, she edits, she gets for all 41,000 followers I have, she gets 100% of the credit. She's done a great job.
No, it's awesome. As you think about media for your founders, what's some advice that you would give to founders around media and getting their story out there? I know, it's something we really work on is when we have founder news, a big deal, something that's getting done, we always want to make sure that we get it out for our founders, and we're this microphone for our founders. It's a differentiator for us. But when you talk to a founder and they're asking you advice around media, what are some advice that you give to founders around that?
95% of founders, sorry, 100% of founders need to be able to tell their story effectively. Yep. And I would say only 80% of them can. That said, 95% of founders, certainly ones that we invest in, non-consumer founders, don't need to do so much with their social media. It's important to be able to tell your story, tell it effectively. As your business gets bigger, it becomes more important. But like if you're the founder of Palantir, which is a $350 billion business, it actually just became important for him to be good at social media. So for the most part, you don't need to do much of it. That said, your ability to tell your story when you have the opportunity, you have to absolutely slug it. And I joke that when I started Animal, I took 16 calls a day. I talked so much that I burned through my vocal cords, and I had to go on vocal rest and do all this like take all these like I almost had to have surgery. Like literally, the doctor was like, "You're either going to not speak for the next 6 weeks, or you are having vocal cord surgery." So I rehearsed in the mirror how to get my pitch down from 5 minutes to 3 minutes. And I joke that probably saved me hundreds and hundreds of hours, saving that 2 minutes 16 times a day for years. It's 32 minutes a day. It's 150. It's 2.5 hours a week. Like it adds up very fast. And so for our founders, go rehearse in the mirror, like actually get it down, and then run that by your investors and make sure that you're getting the most important parts of the story out there, because you actually don't need to answer every question in that first spiel. It's not important that you get it all out. It's just important that you create mystery and intrigue.
Yeah, I couldn't agree more around both pieces. Social media, I think you want a presence, you want to be out there, but if you're always out there, what are you doing in terms of working? Like how much are you really working if all you're doing is being on social media? In terms of storytelling, I truly believe that it is probably the number one thing when looking at the success of a business, A, for fundraising, but B, even more importantly, to sell. I mean, you have to be able to tell your story. You have to be able, to your point, tell it in a very concise way. And so for me, we always look at sales, and sales is storytelling. And so that's a huge part of what we look for in founders, the ability to tell their story and the ability to answer questions about the story that they're telling. And I think it's just it's primary in terms of when looking at the success of a business.
Yeah, you founders are so obsessed oftentimes with why founders are so, the back up. Founders are often obsessed with the business that they're starting and talking about what they're doing. The only thing I care about in that first conversation is why are you the person that can succeed in this space? Because that's actually all that matters. The problem that you're solving, I'm sure I will come to understand and why someone needs the product. Like, that's great. It's why are you the person that's going to go build a $500 million business to do that thing? That's the most important part of the first words that come out of your mouth. Everything else is really secondary.
Yeah, I couldn't agree more.
Well, Marshall, I appreciate you more than anything being on the show today. This was fantastic, and we wish you all the best of luck with ammo. We got to get some deals done together. I know we've looked at some deals as of late together. Didn't get anything over the finish line, but I'm sure we will because we're thinking about things the same way. And I now know that you're a big Southeast guy, which is exciting for us. That's really exciting to have somebody like yourself, the caliber of the firm, actually headquartered in North Carolina. Something I didn't know today, but now I do. So that is very exciting.
Well, we are definitely going to get it over the line. I'm not worried.
100%.
Well, hey, it was great to see you. We appreciate your time. And if you guys enjoyed today's episode, please throw us a like on Instagram or a follow on Instagram. Follow us on YouTube. Subscribe to our channel. If you're a founder, bring us any company that you're working on. We'd love to take a look at it. And if you're an investor, reach out to Marshall or myself. We're always looking to add limited partners to our group. So thank you all very much. Have a great day.